Good morning, everyone. Welcome to our Friday morning trading session. Markets just opened, and it looks like there's a bit of a tailspin going on in the market. I was watching here on the Eagle as we were producing this nice little test of the extreme, and then just a minute before the market opened, we got our sell signal, and then the market opened, and boom, they fell right out of bed, right out of the open there. But that's, that's an early signal. I think I mentioned to you yesterday, the Eagle is one of the few tools I'll consider taking an early signal on, and we would have realized our profit target on that move. It was just kind of interesting to see it unfold so quickly. I thought it might take a little while to do, but nope, they came straight down, it came straight back. So yesterday was a little bit of an odd day. The market kind of moving back and forth a little bit, not really moving higher or lower. By the end of the day, putting in a little bit of a rally. And more of the same in the overnight, actually. You can see the market fairly choppy with maybe a slight upward bias to it. So I suppose we're going to have a little bit of a gap down here. Not a huge gap, but a little bit of a gap here below these lows. But right now the market looks very, very sideways, which is more or less what we've been seeing over the last 2 days of trading. Hopefully we'll see things loosen up a little bit here as the morning goes on. I'm sure we will. Also looking at gold and crude oil. Crude oil in a little bit of a rally. And gold also more or less flatlined. Here's gold on the Eagle. So it did tail off a little bit yesterday. Or I guess this is the open for gold, pardon me, this morning. Tailed off a little bit. And now we're just kind of moving sideways here. But it did move a little bit lower yesterday also. I haven't taken a gold trade for a while. We'll see if we can't see something interesting there. Oh, excuse me, had a sneeze come on me there all of a sudden. Okay, so we're getting some interesting signals here. It's still very early. We're only a couple minutes into the session. We're getting a green bar sell / rule of 3, but what's important here is we're getting a constant retest of the highs with no follow through. Right, so we're kind of in a trading range now. This is a pretty risky trade, by the way, folks. If you're looking to follow me in on a trade, this isn't exactly one of those cherry trades. And so what I'm actually basing it on is this signal back here. And you can see the width of this bar. We're seeing quite a bit of buying and selling going on at this point, and I'm using my logic counter to enter below the low of this current bar. And what I'm looking to do is essentially sell the top end of the trading range, which is where we're at right now. You see we've got the same thing going on here with the Falcon. And we should have a comparable signal here on the Raptor. Yes, we did, right here. And what I would anticipate is that the market's going to try to retest the lows. But again, because we're kind of searching for direction, it's a little bit difficult. I should have actually just done it here on the Hawk, because to scalp this first micro macro cross signal right here, nothing to it. It's going to be a little bit more difficult to do on these larger tools. And looking at the trade forecaster here, you can see we're on full-on scalp mode here and going to move into swing mode in about a minute's time. So hopefully we're not going to see too much more extreme choppiness. All right, so all right, so we've found our profit target here on the Falcon. We're getting really close to our break-even trigger now here on the Eagle. Probably close enough that I'm going to chicken out and roll that trade down there. You see, there's a reason to believe that the support's going to come in. All right, so we took the break-even hit on that one. It was probably a little bit too quick on that. Oh, looks like swing mode is very transitory, and the market might be moving into trend mode here in a couple minutes. But that's all right. We had a decent opportunity there to sell. Here we're getting a signal now on the Raptor, and what I would do with this one is I would look to take it below the low, the current low, right there. This little itty bitty swing low. Or actually, you know what? Better yet, let's take it below the low of the morning. Oops, there we go. Now I know this is really stretching out the profit or the entry, and I don't normally like to do this. Normally I like to take it right on the hash mark because an early entry is important. Oh, I guess I better get a stop and play here. All right, so the big tug of war now between the buyers and the sellers. See, had I sold here on the hash mark, which was my intention, but the market had already gone too far, we'd easily be at our break-even objective. Would we have ridden out that little swing? No, but we would have taken profit on one of our signals. right, so what I'm on the lookout for now is for the sellers to actually step in here. All right, so there are the sellers. So this is my cue now to get a little bit more aggressive with my stops. If they fail at this point, well, then I'm probably on the wrong side of the trade. I could also use this stop right here, this area, as a stop loss if I want to give them a little bit more room on the trade. Again, I'm just looking for where the sellers are going to be pushing into the market. And it looks like they'd better show up soon. All right, well, that didn't work exactly as planned. Again, I should have taken it here on the hash mark as it was coming out of this hard edge, out of the cloud. I unfortunately got into that a touch too late and lost all that downward momentum when we broke the low. Good morning, Jim. Jim says, here's some advanced decline numbers, just under 2,300 on the buy, 450 on the sell. So yes, that's pretty bullish right now. He says oil and the transports are looking pretty bullish, so that may translate into a higher move here. We'll see how that plays out. All right, so here they come again. Here's our hard edge bounce here on the Raptor. And what you could do is you could take it below the low of this bar right here. So it's essentially a second push on the entry. And we'll get the stop in play. I took a little bit of a slip on that entry. I'm looking for them to try to get into that gap, that little bit of an opening gap that's just below these lows right here. That's what's making me a little bit bearish here. And the fact that we had a sell signal work out in our favor, that's always huge. All right, so here we have a red bar buy on the hawk, and this is one of these signals that we don't necessarily need to buy it. We can also look to sell the failure of it. And I would probably set it up like that. Notice all the yellow bars that we're starting to print. That's kind of a clue that we're in a little bit of a chop zone here. So essentially what I'm looking for now is just for this, there's going to be some buying support here. We've had the sellers step in and move the market lower. So I'm just looking for the sellers now to follow through on what they've been signaling. Okay, there's our first micro macro cross. So if you didn't take the failure of the red bar buy, here's an opportunity actually to get in at a better price, although I would probably still enter below this low. Okay, so managed a quick little scalp there. So it looks like the problem I had here with my Raptor trade was just my stop placement. It wasn't so much my direction. I had the direction even though I ended up buying in kind of late. We did call the trade correctly, but that darn swing just kind of held us in. All right, so we're at break even now, and I'm going to try to give this as much room as I can, playing with their money. Just to see if we can't get it to fall off here. Jim's asking, can I see the support and resistance lines? Absolutely. So here's the support and resistance lines on the NQ. So we're kind of just hovering above the median line. Took a little bit of a bounce off of the primary resistance. And let me get you the YM, because I know that's your market of choice. And here are the support and resistance lines on the mini Dow, pretty much skewered by the primary resistance. It's trying to hold the market down. We'll see whether they get down here to the median line or not. It's a fairly tight little trading range there on the mini Dow. Yeah, Jim says the YM's in a box. It certainly is. That's pretty much what it's looking like right there. This is tough trading, obviously, right? The problem with trading ranges, when you try to buy the lows, sell the highs, is by the time you identify the range, it's probably getting close to breaking out of the range. We did see a little violation here. I think, and this is kind of a gut call, I think the buyers are done today. I think we're going to see the market have a bit of a downward trend to it. It's not to say we won't see any rallies or such throughout the day, just that I think we're going to be better off as sellers. And again, that's a gut call. I do my best not to bring my own personal bias into the market. All right, well, here's another Falcon signal, and the market's looking for momentum, so I think what I would do is probably set it up like this, where I would take it below the low rather than right on the hash mark. They slipped us a tick there as well, but hopefully they will continue lower to their target. Come on down. So this is technically a trend change signal / trend line touch signal. So it's a trend change because the trend line was green, turned to red. And then we have our down, up, down pattern, our signal printing. Also happened to bounce off of the trend line, which is encouraging. Almost down to our break-even target. And almost down to our profit target. Hooray for us. So we also had a trend signal to go along. Here's the Falcon signal, or more or less where the Falcon signal generated. You see the Eagle also produced the signal, but here was the Eagle signal. It came in a little bit earlier, again off of the hard edge. This is what we'd like to see. When the market is trending, we're making lower highs, we're making lower lows relative to the last ones, right? Seeing a reaction into the hard edge and the market coming out, printing a signal. Everything is in sync with our ATR, our band, our filter. A pretty nice move overall to the downside. I'm really trying to milk this one because I have to make up for that earlier loss. So I'm really trying to give this market some room. All right, we'll go with the ATR now. Actually, this candle right here, I should roll the stop above that wick. Because this is a big fat one. And if it fails here, we're probably going to see a little bit of a retracement. I may as well take my profit rather than try to ride out another swing. And we'll see here whether or not that was a good call. We'll see if they get back here to tap the ATR, those blue dots. Let's see if I managed to get into the black. Nope, not yet. One more trade. So far that ATR would have held me in. See how the Geiger counter is pulled hard over here to the buy side? You missed it before, or unless you were watching it as well, but it pulled hard over and it was holding and holding and holding. That's a pretty good indication we're going to see at least a short-term move higher. So right now the ATR is still holding me in until right there, so I would have got stopped. So it was a good call to react to this big fat bar down here and take my profit a little bit earlier. It's a very helpful thing about the equivolume bars when you can judge where the buyers and sellers are really starting to dig into the market. Excuse me. All right, so we've got a little bit of a bullish reaction now, perhaps some profit taking going on. We're near the top of the hour, so that's kind of when the time the buyers and sellers have set their parameters for the morning. I would anticipate a move back into the hard edge here, so to see the market trading around 39.85-ish. seems plausible. Sure, Tony. Tony asked, yesterday Jim mentioned something about the equivolume bars. Can you repeat that? Just that the fat equivolume bars give you a good visual of the immediate support and resistance. All right, so we know there's obvious support there. We know there's resistance up here. Just based on market participation, we know this is going to be a stronger resistance area. This is going to be a stronger support area. If the market breaks above this high, we know that the sellers who sold here, there's going to be a lot of stop loss orders right here, right? And we know that the buyers who bought here, they're going to have a lot of stop loss orders down here. So I think what Jim does is he actually treats this like a range and he tries to buy the lows and sell the highs. Jim's a little bit more aggressive than I am when it comes to that type of thing. But the dynamic equivolume bars, they give you a good visual because you know that the market is always going to have significant turning point or significant breakthrough where these higher volume bars show up. See, if you look at almost every turn, you're going to notice that there's a lot more volume. These not as wide, pardon me, because it looks like they took a little while to develop because it was in the overnight, but just the fact that they were all in this one region. If we went to a higher tick bar, maybe to a 10 tick or a 12 tick, this would very likely all be in one bar. One big fat bar. All right, so here we go. Unfortunately, we were looking elsewhere when this broke out, but chances are when this broke, it went boom, 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 went down a little bit quickly, and then now we see the buyers trying to recover it once again. Yeah, okay, that's good. Jim says he's going to shoot me a JPEG on Monday so that I can share with everybody the activity at those areas. All right, so we're falling off a little bit here. I thought we were going to see a little bit more of a reaction. Fortunately, unfortunately, the sellers came back and ended up pressing the market a little bit lower. Sencom is asking, Eric, what is that green line on your Raptor screen? This is the initial balance line. It's similar to Jim's first hour high. What it does is it tracks the high and the low for the first half hour of trading. The only real difference between this and Jim's is that Jim's does not plot until the first half hour of trading is done, and this one automatically resizes. But other than that, they are identical. So the notion is that, pardon me, excuse me, notion is that the first half hour of trading is when most of the institutional traders get busy. And there's a lot to be said for that. You know, a lot of times you'll see significant resistance come in at the top of the hour, and that the market will in turn respect these first half hour highs and lows throughout the day. Something, it's called the initial balance lines. And hold on a second, I'll see if I can't find them for you. They're at the Indicator Warehouse site. If you go to indicatorwarehouse.com and you just type into their little search window, initial balance lines. I'll see if I can find them. I don't know if you guys can get active links in these windows. Oops. I hope so, because that would be a horrible link to try to copy out. So you can check them out. Like I said, they're the same as Jim's, except they do resize automatically. Other than that, they perform the same function. All right, so here we are. We got a little bit of a pullback. Looks like the momentum's waning a little bit as we hit the top of the hour. Might see that reaction, that little bullish reaction that I've been anticipating. This is a tough call here. We got a 4-arrow consolidation here on the hawk, and I know it's a high probability signal. Where am I going to cover it? Back there. So this 4-arrow consolidation, the ones that have the bear flag type shape to them are usually my favorites. I don't like the 4-arrow consolidations. I don't mind the 4-arrow consolidation that's sideways, but every once in a while you get a 4-arrow consolidation that slopes with the trend. That one doesn't do so much for me, even though very often it does have decent follow through to it. 4-arrow consolidation occurs whenever the market enters this consolidation phase, right? It just starts going sideways. A little bit of choppiness going on. So we produced 1, 2, 3. There's the fourth signal. We anticipate that the market's going to recover the trend off of the fourth signal. Took a little bit of a slip on the entry. What's with the NQ slipping me this morning? And there's that little bit of buying pressure coming into the market, what we've kind of been waiting for. They flashed us a green bar sell there for a moment. The hard part about this trade is going to be riding out this swing. You see, had I gotten my fill on the hash mark, I also would have got my break-even trigger, and we would have been out here at break-even. So now I got to work a little bit harder at this one. This is not a first micro-macro cross to buy, not yet anyways. The macro line's still out of sync. Okay, now we're into yellow bars, so that makes me feel a little better. I should probably start to roll my stop. If it fails above this high now, then I should probably go. Although I feel good about the short. Oh, don't make me make a decision. Get down there. Come on. There you go. You can do it. You can do it. Oh, whew. All right. So flashing a red bar by, not what I want to see. Get down there, you stinkers, you. Come on. Oh, they know they're going to go lower. I don't know why they're taking their time. They're just torturing me. Oh, don't you dare. Don't you dare. Jim says there's a lot of wicks on the 3-minute chart, but on the YM that is. So we'll see whether or not that pushes them down or if they're going to try to tag me here. You stinkers. Scoundrels, get down there. All right, now we have a first micro-macro cross higher. That's not a good sign. And while I don't anticipate a rally to last, I sure don't want to get tagged. All right, give me one more chance and I promise I'll be more aggressive with my stop like I should have done the last time. I'll be a good boy. All right, there we go. I said I'd do it. There we go. So I've gone with the more aggressive bar high low stop now. The idea being that this is really the last chance the sellers have to recover the market. Here come the buyers. If they tag me here, at least it'll be for a minimal loss. If the sellers recover the market, I should be able to get to my profit target. Oh, the agony. Get down there. Look at this. They're just holding these lows. The buyers decide to show up. No! Oh, you stinkers. They're going to head lower too. Just watch. Well, it looks like it was just as well I took my profit where I did, or took my loss where I did, because they haven't quite succumbed to the fact that they're supposed to head lower yet. So everything's starting to break up here a little bit. Wow, actually a stronger rally than I anticipated. So, well, I guess all things considered, I managed that trade about as well as I could have. Speaking of the first hour high and low, you can see there was some of the problem as well. Every time they got back down to the 7 o'clock high or the 10 o'clock, pardon me, not high, the 10 a.m. low, that's where the buyers decided to jump in. So we're back into the hard edge. Same thing going on here in crude oil, where we've had a trend change. So we've had a trend change, no signal. We're working on the signal right now, and it may actually turn out to be a late filter entry signal as well. Can you believe that crude oil is trading at around $27.50 a barrel? Unreal. Well, the Saudis, I think it was the Saudis, said it could go all the way down to 20, and they ought to know. All right, so a green bar sell. This is a very aggressive trade here, folks. We're getting a green bar sell here on the Eagle. I would try to cover it a little bit high, or as high as I could manage, because I'm not entirely sure they're ready to head lower just yet. And so we can scrub the green bar sell as we countered with a buy signal. So we've actually got two buy signals here at the moment, working on a possible rule of three to the upside. And here we come once again with our green bar sell signal, or at least the warning dot, maybe not the whole signal. Nope, not quite ready, not yet. Wow. Tony says gas is $1.40 in Kansas. That's almost worth the drive to go get some gas. It's currently just under 93 cents a liter here, although I've heard in Alberta is typically 30 cents less than we are here on the coast. So theirs is probably around 62 to 65 cents a liter, which would be pretty close to what Tony's paying. Yeah, Suncom says it's $2.45 a gallon in San Jose. You live in a nice part of the world, Suncom. I like San Jose. It's a pretty community. Thanks, Tony. Tony just offered me accommodation if I happen to find myself in Kansas. Well, the buyers appear to be a little bit stronger than I first gave them credit for. We'll see whether or not they can hold on to it, though. So we have, technically, we have a rule of three signal. What is giving me pause is the big downtrend. The big downtrend with no real test of the extreme, right? The chances that the market's going to make a V reversal here and just head higher is slim to none. The market doesn't seem to be moving that fast today that we should anticipate that type of reversal. So we've had a whole lot of selling going on here. We've got a little bit of a pullback. This may just turn out to look like a larger bear flag, but what we really need to see before we get that reversal, or at least what I'm waiting to see before we get the reversal, is that retest of the lows. Get that retest of the lows, and then we can get serious about buying. But right now, it looks like we may get that retest of the lows I've been waiting for. So we've got the green bar sell. It's currently against the ATR. I will err on the side of caution and let the market flip the ATR over, which I know is going to occur on that bar, because I can tell from my logic counter, if this bar finishes on the low, it's going to trade through the ATR line and it's going to flip the bar over. See? So it flipped the ATR over. So this effectively now becomes the signal bar. And I just hope my stop is far enough back. As those buyers are going to be digging in again down here around this whole 39.60 area, 39.58, 59.60. Shoot a little trend line here. This is why we're getting a little bit of buying reaction here. The buyers are hoping for a bullish trend to be evolving, and so far it's dead even race between the buyers and the sellers. I can probably afford a couple more ticks on my stop, so I'll just keep my stop a little bit higher just to start. Come on. Come on. There we go. Oh, you're kidding me. Oh, you're kidding me. All right. I'll take my lumps. So we've got a reaction here to the trend line. The market taking out the highs. Wow, are they really going to mount a rally? That's something. Yes, they are. Yes, they are really going to try to mount a rally. Well, ideally, we'll see a little bit of a pullback here into the band again, and give us an opportunity to perhaps buy in. Although they're taking their time about it. Cloud crossover here on the Raptor. Same thing, we would anticipate that the market's going to try to drift here into the hard edge, into the cloud, where it should get some sort of support. See us Uncome, he's calling it a day. He said, well done. 59 ticks in all, 10 in the NASDAQ and 49 in crude oil. Nicely done. Peter is asking, good morning, Eric. Do you use DTS for stock trading? I have a few stock accounts and I'm thinking of using DTS. I don't myself, but that's just because I don't trade stocks. Michael Filigera, however, does, and he uses the DTS system to trade the stock market. So, yes, you can. Absolutely. The only thing I would recommend is that you spend a little screen time with your stocks first. Before you go full into trading them with DTS, just to get familiar with how the stock is going to play out, especially with the Trade Manager tool. We've got the first micro macro cross here that I missed, and what I'm thinking about is maybe taking this signal instead. But what's bothering me is we're kind of at the top end of this range. I would really rather buy low than buy high, although it looks like it's going to work out. If I buy near the top, then I've got to leave my stop way, way far away to try to ride out a swing, right? I'm buying near the top. I've got to try to keep my stop way down there, and I can't do it. Not with that. Maybe down there. Well, I could do that. So in case they run away on me here, I'd get an order in. It's not a pretty trade though. Okay, Mo makes a really good comment here. Mo asks, Eric, this might not be a good idea, but it works out a big percentage of the time. I use a 50-tick stop and a 16-tick exit on one contract, and that way I can stay in the trade. Good idea, bad idea. I have 4 winning trades so far, but it seems to work for me, but may not be a good idea. Okay, I am a big fan of a deep stop, at least initially, as far away as I can afford. Now, 50 ticks, you're only trading a single contract, so you're going to have to determine whether those 50 ticks are something that you can afford. What I mean is 50 ticks, I'm assuming you're trading the NASDAQ, so that would be $250, which isn't a huge stop or a huge amount. Even if you're trading a smaller account, like say a $10,000 account, that's still very prudent. That's less than 5% of your trading capital. And you're right, a deep stop like that enables you to have a lot of staying power. And I like the deep stop because, well, here we are in this particular trade. We normally will get at least one chance through here to adjust our stop, at least one chance. What I don't want is I don't want to have my stop, right here, and I'm wringing my hands thinking, oh, I'm going to end up getting stopped out. It's not just getting stopped out. Yes, my risk is a whole lot less here. I may only have $100 at risk versus whatever this is, $300 or whatever. But every time I get stopped out, I also owe exchange fees and everything too, right? Well, I owe them anyways on the commission side. But I don't want to have to re-enter the market too many times. The commissions and the fees will just kill you. That's another reason I'm a big proponent of only looking for, say, 2 to 5 good signals throughout the day. So you don't have to take a signal like this. You don't have to take the lower probability signal. You can wait for the pullback to the hard edge. Let the market come around to your way of thinking. Here we have a 4-arrow consolidation in the hawk. All right, 4-arrow consolidation. You want to give it a go? Sure. But here too, I can't put my stop right there. I need to put it further back. And, it is an amount I can afford to lose. It would not be my first choice. Obviously I don't want to lose money. But no, there's nothing wrong with your strategy, Mo. It's actually very sound. Yeah, like Mo says, I was able to stay in on that last reversal where otherwise I would have been taken out with a lesser stop. A stop is only your safety net, right? This is a high wire act. This is your safety net in case you fall. This is what keeps you from blowing up your account. I don't know if you were in the room when I mentioned this before, but I've spoken to 2 people. I would have thought this was a unique occurrence, but I've spoken to 2 people who have blown up a $20,000 account in a single day. I think one was a $20,000 account and the other was a $25,000 account. In a single day. How can you do that? It boggles my mind. I can't wrap my head around it. In a single day, you blow up a $25,000 account. That makes no sense to me. Obviously, there's no stops. I think one of them was averaging in, so as the market kept moving against them, they kept buying more and more and more until they ran out of money. Yeah, it's foolish. It really is. All right, that trade worked out nice. We got in on our hash mark. We hit our high probability target. That's textbook. That's just how it's supposed to work. We gave ourselves enough room on the stop side that if the market wasn't ready just yet, then at least it had some room to sort itself out. You know, you can tell just by looking at the charts that the market rarely makes a straight line, right? There's always some sort of reaction along the way. And the last thing you want is to sell here and have to endure the reaction, but it does happen. So if that does happen, if you do find yourself in that situation, don't panic. Make sure your stop is set at a reasonable level so that you can ride out those kinds of swings. How big are those swings? Well, they do change. That's where the Day Ranger tool comes in handy. Kind of plots your average ranges over the last 30 days. So we can see that the 30-day average was 427, the 10-day average 435, and the 5-day average 406. So it seems like they're hovering around that 420 mark. Today we're only at around 200. Yesterday we were near 500. So what does that tell me? Well, that tells me that, let's say I want to have 20% of the daily range as my profit objective. You know, just take a single trade and look to capture 20% of the daily range. Not at all unreasonable. So what's the daily range? Around 400? So what would that be? 80 ticks? That would be a decent move. A single trade, grab 80 ticks. You could have done that today. Let's see here. Why are you giving me a hard time? All right, we'll have to. Not sure why that is doing that, but here we go. So we had a signal to sell. Oh, and same thing. You could use a day range and say, okay, I'm going to allow, say, 20% or 15% of the daily range as my stop loss, in which case that would be 60 ticks, wouldn't it? So we're going to, here was our signal out of the open. 60 ticks would be around 4. Well, we don't need to go all the way out to 60 ticks. That would be 30. Yeah, right about there. I'm a little bit shy, but there's our 80 tick target. No problem. And that could be your day. There's nothing wrong with that. 400 bucks on a single trade. Shoot. You only owe $4 for commission and a couple bucks for exchange fees and whatnot. Yeah, that's very handy, you know, if you're tracking what the daily range is like. Okay, excuse me just for a moment, folks. I'll be right back. Hi, sorry about that. I hurt my back a few days ago, and my office desk or my office chair has become an instrument of torture. So every once in a while, I just got to untether myself from the computer and go for a quick little walk around the house, try to loosen things up. All right, so here we are. What's been going on? Oh, the seller's trying to make a comeback now. So they're starting to waffle a little bit here. I don't know whether we're going to see the sellers actually take control of the market or whether the buyers are going to hang in there. See if we go back here to the Eagle. Well, pretty shallow. All right. Well, we're flashing a macro pullback signal here. They're reluctant to head higher, so they may want to try to head lower. What I'm concerned about on this particular trade is two things. First off, we haven't seen a real big test of the extreme here to the upside. Second, is this current move a test of the extreme to the downside, in which case I'm going to find myself selling a buyer's market. I guess we'll find out here in a moment, won't we? Jim says oil's trying to press higher and the DAX is dead. So not a whole lot of help from the crystal ball side of things. Where's that magic 8-ball? Come on, magic 8-ball, what should I do? What do you mean try later? Stupid magic 8-ball, just when I need it most. All right, what happened there? Oh, hit the profit target. Duh. Hit the break even. All right. Working on a trend change signal here on the Falcon also. Just working it, not there just yet. Thing about the Falcon signal is it should actually print right here. If we end up producing a triple dot, nope, not going to happen. I was going to say if it ends up producing a triple dot, we could sell below the low, which I'd feel a little better about. I don't want to get into the sideways market nonsense. And you can see the hawk is starting to interject a few more yellow bars into the mix. 2, 3. If I wanted to get a little aggressive here on the hawk, if I was really desperate for a trade, this isn't a 4-arrow consolidation, but it's close, where we're producing 4 signals. 1, 2, 3. This is going to be signal number 4 if the market breaks down. It's not as valid a signal as the 4-arrow consolidation, which actually trips. It actually shows you that the market is trying to regain the trend. Here's 1, 2, 3. Here's attempt number 4. And the arrow only prints when the hash mark is actually engaged. Here you see the signal printed, but the hash mark never engaged. Here it did, here it didn't, and here it did. So technically this is not the purest rule of, or a 4-arrow consolidation, but it still has that bear flaggedness to it. The 4-arrow consolidation, by the way, is the only signal I will take off of a yellow bar in the hawk. All the other signals, yellow bars are a no-no. Well, they're still trying to sort things out here. Yeah, I think you're right, Jim. Jim says if oil sells off, then we should see the indexes head lower too. But I don't think oil is as much of a trigger as it was before. You can see here, had a nice rally in oil from around 7 o'clock to 7:30. And even if we bring over the YM here, well, I guess the YM follows it closer than the NQ. Decent rally from 7 to 7:30. So the YM tied much closer to oil than what the NASDAQ is, because you can see during that same time frame, I'll show you here in just a sec. The NASDAQ rallied, but not nearly as aggressively. So 7 a.m. here to 7:30. Missed the first micro macro cross back here. Well, we were already in it. Sorry, we were already short from our 4-arrow consolidation. Working on a possible trend change now with the Falcon. Try not to get too excited here because the market is drifting a little bit. They are moving a little bit sideways. All right, so here comes that maybe trend change signal. I thought I saw a warning dot here just a moment ago. There it is. So we're going to look to short below the low, cover above there. And then you once again get turned at the low. Now I've got a green warning dot here. I could readjust the trade. If the market comes back, I'm going to produce another sell signal. See? So now we're getting the warning dots once again. Oh, and it keeps flip-flopping back and forth. I suppose I could just park the order there. If it does turn around, it should give me an opportunity to sell there. All right, let's see what they do. Let's see whether the buyers can pull it off and rally the market at this point, or whether the sellers are going to send it lower. I guess we can scrub that now that the trend line is flipped back. We do have a green bar sell here on the hawk. Problem is, this may well be the test of the extreme. The best green bar sells occur when the market hasn't given us a test of the extreme yet, and now the warning dot has disappeared, so the green bar sell is no longer viable. Yeah, it's looking like the the buyers are giving it a pretty good push. I thought the sellers had this market in hand today, but maybe not. I'll tell you one thing, though, I don't like the market flip-flopping signals like this, where it flashes us a sell signal, then it comes back with a buy signal, and a sell signal, and a buy signal. I do believe we had enough follow-through on each of these to hit our profit targets, but still, that's not what I want to see. Again, it just goes back to trend, right? If we keep changing direction that often, we don't have any trend. and it's more difficult to make money in a non-trending market versus a trending market. Well, you know what, guys? I think that's going to be it for the day. It looks like we kind of hit the flat spot of the day right now, and just as well, it is Friday. Why don't we close up the room? We'll call it a week. And Monday is a holiday, so no session on Monday. I will see you guys again on Tuesday. Enjoy your long weekend. We'll talk to you later. Bye for now.